seeing the results that it had for our clientele. I would see them bring in this injection of funds. Their teams would get bigger, their offices, their market share. It was very exciting to be a part of. We've worked with some groups on 7+ rounds at this point. I've seen companies go from $5 million valuations to over 200 million. I've seen and worked on both of those for the same issuer. I've seen companies go from $20 million valuations to over $3 billion valuations. Worked on the later rounds for that group. So it's very fulfilling. You are on the front lines of performance. If it doesn't work, there's no one else to point towards. So we've had to be very creative on how we launch these campaigns, how we get them to successful metrics quickly. But it's very rewarding to be a part of. That's why I choose to focus my time there.
Jason, how are you doing today, sir?
Doing great. Excited to be here, Gene.
Awesome, awesome. Everybody, I have Jason Fishman here. He is with DNA. He is a growth marketing agency and he specializes in capital raising. Amazing. I want to hear more. If you could first tell me a little bit about yourself and then we'll get into some of the nuts and bolts.
Absolutely. My pleasure. My pleasure. I'm based here in Los Angeles, in Marina Del Rey, California. My background's in advertising, ran a mobile advertising network, working with, Fortune 500s, full spectrum of different industries, timelines, budget levels, got a feeling for what worked, didn't work, and wanted to be involved with scale ups, growth stage companies, as part of the entrepreneur scene out here in Los Angeles. So I created a growth marketing agency, DNA. As you mentioned, our specialization around capital raising, I found that to be a common part of the conversation, working with early stage, mid market, growth companies as a whole. They were always talking to me about which investors they were going after. Hey, can you work on the marketing section of our business plan? Can you put together a pitch deck for us? This first campaign, we want to show the results to our finance partner, to our investor, and get more capital to take it to the next level. In fact, can you participate in this investor presentation with us? Can you actually
Wow,
pitch the
wow.
investors? So it was always part of the conversation. I was introduced to these exemptions under the Jobs Act, Regulation D 506C. It allows you to solicit accredited investors. So you can market to high net worth, high household income individuals. And with my background in advertising, I said, hey, I can use data partnerships that I have to go after people based on how much money they make or what they're worth or even what's in their portfolio. I can run ads directly to them. So I worked on a campaign there, saw success. It was for a solar company. Was introduced to more issuers from there. I saw the solar company grow as well, and the founder was featured as a Forbes 30 under 30. They started putting together all these partnerships. It was a big deal. It was impactful. So I said, hey, I want to do more of this stuff. And as I was being introduced to more groups, the laws opened up further as well to target retail investors. So I can run ads to any adult. And I could take them to these portals, these marketplaces where many of the deals are listed. They're called investment crowdfunding sites. Some groups, some issuers issue the deal. They promote it on their own websites, and there's technology to be able to process the investment. That's through Reg CF, Regulation Crowdfunding, and Regulation A+. Reg CF, you can raise up to $5 million from both retail and accredited audiences. Reg CF, Regulation A+, you can raise up to $75 million. In fact, even public companies use this to do priced rounds. Some groups use it towards their direct listing and to go public. And we've worked on over 500 of these deals. They've
Wow.
collectively produced hundreds of millions in capital, and all through content marketing, advertising, and outreach.
So I have a question. I feel like we're getting both here. We're getting a financial education as well as a marketing education.
A little bit of both.
But question on how did you just get pushed into the raising capital? Was this something you wanted to just because of your background in the marketing and it helped you? Or how did you get into that capital raising portion of it?
Yeah. Yeah. Well, working with growth stage companies, they fail if they're undercapitalized. And I saw CEOs where they looked at it as their full-time job to raise more and more and more funds. I can tell you in many cases they were limited to their first degree network, maybe their second degree network, people they knew, and someone that they were able to connect them to. So there is a disparity around one's network and how much they could raise, regardless of how amazing their product or company and team were. Sadly, in my opinion. So what these vehicles allow for is democratization, access to capital for founders, for CEOs, access to this type of deal flow, among private companies for investors as well too. And retail investors, they didn't have a seat at the table. They weren't allowed to invest in these types of companies. Some of them unicorns that private equity investors were. I was fascinated by this. I was driven towards it and
Mm,
seeing the results that it had for our clientele. I would see them bring in this injection of funds. Their teams would get bigger, their offices, their market share. It was very exciting to be a part of. We've worked with some groups on 7+ rounds at this point. I've seen companies go from $5 million valuations to over 200 million. I've seen group and worked on both of those for the same issuer. I've seen companies go from $20 million valuations to over $3 billion valuations. Worked on the later rounds for that group. So it's very fulfilling. You are on the front lines of performance. If it doesn't work, it's there's no one else to point towards. So we've had to be very creative on how we launch these campaigns, how we get them to successful, metrics quickly. But it's very rewarding to be a part of. That's why I choose to focus my time there.
nice, nice. Obviously, you've had some success, and I'm excited to hear more about your success. But let's back it up just a little bit.
Sure.
I'm sure there's a journey that you've had to go through. We all have a
Okay.
journey, and you probably have some ups and downs or challenges and pivots. Can you share some of that with us before we talk more about some of the other things you got going right now?
Yeah. Yeah. Let me open up about that a little bit. Marketing agencies, they really need to have a specialization and niche, if you will. Otherwise, you're one of 1,000 other agencies in your state, probably in Los Angeles for me, in my city. If I was reaching out to an apparel company, they probably had been contacted, dozens of times, maybe that week, by other agencies. And we're just another group there. Going to a conference, whatever it looked like, you really need to have some stuff to stand out, some competitive differentiators. And working with groups that were early stage, marketing budget wasn't, plentiful. In some cases,
Right.
not fully available. So I would work with a lot of founders, would speak to them, and they just didn't have the ability to move forward. If I could bring them an investor, that'd be great, and they could work with us, and everything would be able to move forward. So, in the early stages of the agency, we were kind of blessed by referral partnerships, but limited around our growth to what type of referrals were coming in. Had tested out different markets, things I was passionate about. I grew up here in Southern California, snowboarding, skating, surfing. Let me work with those brands. And we worked with a
Right.
few. There's only so much budget there. We're in Los Angeles. Let's work with entertainment companies. We work with a few, but again, very competitive and would only get so many referrals. I actually had a lot of success with apparel, but because of a creative agency we're working with that was putting together their photo shoots and their graphic design and their websites, and they'd come to us for advertising. So went through some growing pains there, Gene. There was some months where business development felt a little more questionable in terms of the projections we were putting together
Right.
and towards our own evolution as a business. And then that completely changed once we started getting involved in this space. So it wasn't an overnight thought of, hey, we're a capital raising agency, we're an investor acquisition agency, an investment crowdfunding agency overnight. It was more along the lines of we saw the impact that our work was having with these companies, started getting more referrals, then said, let's do this further. Let's seek out more companies that can refer us this type of business. Let's reach out to some of the issuers, some of the companies that are filing with the SEC directly for these, regulated raises. And then took the data, looked at the findings and said, hey, there's something here. I mean, we're producing millions of dollars with these campaigns. It's working very well for the clients. We're one of a few groups that do this at this point. And I've seen the market changed. There's been more agencies at times, less agencies at times. Referral partnerships and relationships could change up at times as well too. It could be shorter engagements. It could start at lower budgets. I'll tell you once it's working, they scale, and that's not the case. But there are, pros and cons to it. But looking at our own identity as a brand and where we're getting the best feedback naturally took us to this space.
Sweet, sweet. Now, correct me if I'm wrong. I believe you've been in business 14 years as DNA?
Since 2014, so 12 years.
12 years. Okay. So how many years did it take before you started seeing the success that you've had versus it? Because obviously you got COVID in there too, that probably had a hiccup maybe. So how long did it take before you started really seeing the revenue come in that like you wanted?
Well, there's different points to it. So the first year, through some different referral partnerships, the first half of the year looked much different than the first half, and then it slowed down the second year. That's actually when we got involved in this vertical, and the second half of the second year really picked up. Put together some different relationships where we had very steady volume of inquiries and clients coming through. So I would tell you 2016 and how it kept growing from there, just looked up. There were question marks when COVID started. What's going to happen? Had some client cancellations, pauses. People were fearful, but the clients that stayed live were getting investments.
Mm-hmm.
And the retail investor really emerged at that time. You think of the Robinhood, financial app, and how many people started investing there, and how many retail investors started, day trading and swing trading and getting involved in the markets, maybe because of free time, maybe because they saw a period of economic growth around there, and our space really took off. 2020, a lot more companies were running these capital raises online. 2021, same case. It did slow down a bit in 2022 and it stayed stable for a few years. Uh, Parts of the industry have grown over the past couple years. Other parts have stayed pretty steady. Regulation A plus, there's a lot more companies using that, and a lot of these big, $40 million plus rounds. We've worked on many of those. So you look for where the growth is, kind of gravitate towards that. But I would say around 2020, so I guess, 5, 6 years in there is
Right.
when it really started moving, if you will. You have learnings. You can look back in hindsight and, should have built more referral partnerships early. And, we have over 200 groups that have referred us business. If we had stacked that, the first year, it probably would have
Right.
set us down a different trajectory, different path. But there's definitely things that we could have done earlier that would have supported. But it was all in due time. The market was, maturing for these verticals that we're well known in as well. But it took longer than I would have guessed right out of the gate. There was good
Mm-hmm.
periods, good times. We ran good campaigns all the way through. But our team size, our revenues, everything grew. We were featured as a Inc. 5000 company. What was it, 2022? I mean, we kept seeing our acceleration grow after 2020.
Nice, nice. How big of a team do you have now?
So right now, 15 W-2 employees, additional contractors on top of that. It's a good level for us. Have different efficiencies with AI and different types of tech. For me, it was really talent acquisition and finding strategists that could do 2, 3 people's jobs in some cases, and really form a tighter bond with clients and be able to give them stronger recommendations.
So you mentioned AI. That kind of brings something up. I want to get back to the capital raising here in a little bit because I don't let me forget. But on the AI side, tell me about how AI trends have either helped in some aspects or maybe hindered in other. How do you see the AI industry going for you guys?
Sure. It's that time of the show. Every podcast, every panel asks about AI at this
Do
point,
they
and
really?
rightfully so. Rightfully so. It's done both, to be honest. I'll start with the hurt.
Okay.
We'll keep it positive, starting here and talking about how we've grown through it. I think many verticals would tell you this, but AI allows entrepreneurs to feel like they could do anything and at a low cost. So, uh, it's tougher in many cases to manage the perceived value of our products. I know many agencies who have slashed their prices over the past few years because of AI solutions that they heard some of their clientele was using. There's other agencies, competitors that use these tools for too much and could offer
Okay.
rates that are substantially lower accordingly. Almost like a race to the bottom, if you will, not really charging off
Okay.
the value, but off their time and a limited amount of time at that. We end up getting some of their clients at later points. So it's not to say that's, if it sounds too good to be true in many cases, it's not. So pricing, the market, competition, perception of what AI can do. And I'll tell you before getting to how it's helped us, I look at business plans, marketing plans every day that just are very clear. They're created by AI and they're very surface. They're not good.
So I was
As a
just going to ask you
yeah,
before we get to the highlight of how AI is helpful, but other than slicing the prices and disrupting the flow of everything AI, but what's your experience? Is AI really making a difference in the market? It's like you said, there's a perceived value, but how much of that is real value?
yeah. No one likes to look at a social media post or an advertisement or an email or an outreach message and say, "Hey, this is obviously AI." The good use of AI, you should not be able to tell it was created by AI.
Right.
If it's very clear, hey, this long thing was not written by a human and it was, somewhat in a lazy fashion just pumped out by a brand that says something to the target audience. So, can you use AI for these things? Absolutely. Does it matter who's behind the helm, who's behind the wheel? 100%. If it's me as a marketer looking at a marketing plan or putting together a marketing plan with AI, it's going to be radically different than if your CFO is putting together a marketing plan. The things
Right.
that I look for are going to be dramatically different. Telltales of creatives, advertisements, content pieces, visuals, videos that say, hey, this is AI to anyone who understands, let alone a lot of it's just common sense when you look at it, there's going to be a glaring contrast. Um, so, how do we use AI? Well, I have a rule internally of it has to be better than human if we're using it. There are agencies who create a high volume of content pieces and it benefits their SEO ranking. Some of what we're able to do with video editing and take actual video, but enhance it, put other video clips, video library pieces in there to put something together very quick that would take substantially more in terms of budget to produce. Meanwhile, having the right quality control, so the audience wouldn't be able to tell, hey, this was just a prompt in the AI because it's not. It's used to enhance. Makes a big difference. How we collect data on users and how we're able to advertise to those users, we can stack in terms of what we were doing manually or even just some automation. The graphic designer, our creative director, likes to really do things manually, but there's different ways he'll put his work into AI to take it to the next level, or during storyboard conversations, get some different inspiration from there. Some of what our content team does as well too is similar to what they're writing. So there are different ways we're using it, and for advertising optimizations and being more precise on who we're reaching when and with what type of creative. But I'm telling you, it really comes down to who's putting it together, who's setting it up, not just trusting the system. I fight with these tools all day long. They're constantly wrong. So you have to be able to assess it. My wife's a lawyer. She tells me about lawyers and law firms getting in trouble for referencing fake cases that AI pulled out. Like you really have to triple check anything that is being put together by these tools. They can be amazing, but they can also amplify. They can amplify how good you are and being able to take things to the next level with this technology. They can show how you overlook things and what that means for you as an individual, as a professional, or as a business.
Yeah, I'm trying to think about the compliance side of it, that unless you have a human overseeing it closely, it could totally go, oh, array really quick.
Absolutely. And the right, human. If I was trying to look at those
Oh,
legal cases, it would probably get by me. I probably wouldn't understand half the things in there. The same
right.
is true if it's not, a marketing professional with experience, meaning they've seen this so many times they could feel when something's off, that is making the decisions. Because with marketing, it's not a matter of the deliverables being complete. We could do that, and for every engagement, every time. Client satisfaction is a whole different level. Performance is what they're really shooting for, though. So, in many cases, working with growth stage companies, one budget has to produce the next. If the results aren't there, no one cares if you save time by using a tool. It's all about the quality and the performance to follow that our clients are focused on, which has shaped how I use these tools and my expectations from the team.
So future AI. This will be the last thing on AI, and then I want to get back to the investment thing. Um, AI in a couple years. How do you see it? Because it's changing weekly. It's ridiculously crazy. But how do you see it affecting maybe your business any further? Or do you think that that human element they can never replace?
Could take it to a place that's scary. I would have actually assumed technology would have ramped up much quicker and at different points in my career. Even the LLMs that most people use, I mean, this stuff's been available, earlier versions, but for years now. So I think the timelines are commonly off. I heard it was going to replace all of our jobs, 2 years ago, and it still hasn't happened. There are definitely cuts that are
Right,
occurring, so
right.
it's happening, but it's slower than anticipated. I think people will be less impressed by the fact that AI is being used and more impressed, more taken back by how people are utilizing it. So,
That makes
again,
sense, actually. Yeah.
you shouldn't know offhand, hey, this was created by AI. You should just be mesmerized by how amazing what an individual or what a brand is doing.
Got it.
And then if they're, lifting up the hood and showing how they're doing it and how they've created 200 versions of the same prompt and how they take the output and put it through a different system and have agents deploying accordingly, that's where you get to some things that are pretty amazing. Uh, it only takes one mistake for a company or a standard operating procedure to fall apart. So it really has to be, more than triple checked all the way through. But the ways it could impact strategizing and business planning and being able to take into account market conditions and competitors and put together a model of what needs to be tested with the right questions, with the right pushback all the way through. It'll be interesting to see the way companies compete, competition. How are
Yes.
they going to have the upper hand? Because, if everyone has the same tools and the
Right.
same approaches, what's going to set you apart from someone else who's looking to eat your lunch?
And that's got to be that human element. It, no doubt, it has to. Okay, let's go back to this capital raising. How does that work? Meaning, I could see where if you had someone that's ready to invest and you had somebody that needs money to be able to further their business, how do you marry them? Or is it something that's already, you already have them on standby and they're looking for a certain niche? Or is it something that you to pair a certain type of company to a certain type of investor? Or kind of walk me through that process.
Sure. So test, optimize, scale. Something I say a lot. It's our approach towards marketing. You need to have different variants. It's merely a test until it's validated with the data and the performance. So rather than going into a campaign and thinking, hey, this is a no-brainer, it's a baseball movie and we're going to advertise to baseball fans and we're going to be able to raise capital accordingly. We want to cast a wider net. We want to have 4 to 10 different audiences to market to that we're going to compare and contrast and do more of what's working. Baseball, sure. Season ticket holders, sure. Films, separate from sports, absolutely. Different sports professionals act that. I've seen sports accelerators invest into all different types of sports, not just the team where they're getting the funds from around their inherent sport. Dodgers had an accelerator. I can tell you we've built a database of investors who've participated in these types of rounds. Some of them have over 100 deals in their portfolio. And if we're
Wow.
marketing towards them, I'm anticipating a stronger response than any of the groups I mentioned, even if it's endemic to what a company, what space a company operates into. We could go after higher net worth investors, some of them that are in that portfolio. We go after lookalike audiences. We go after retargeting audiences. I could look at what audiences I ran to recent campaigns, audiences I built and tested for client campaigns, and based off that relevancy, say, hey, these guys are more in market. I would tell you as well too, open targeting to test out in comparison, baseline. Sometimes you can see pockets of performance outside of where you would have originally targeted. I always think back to I mentioned all the different types of campaigns we worked on. A women's apparel brand, kind of fast fashion, picture items that are under $100, and we saw the best conversions from display banners on real estate sites.
Really?
They would have wanted us to be on, lifestyle, fashion, and we were. But we put together a tier one site list. A lot of the sites are boring, weather.com type sites, but they convert. They get people's attention. So we were able to look backwards and say, okay, real estate, people often look above their means, maybe fantasy homes, maybe something a little more than their budget if they're in market. Meanwhile, they see an ad next to, a $5 million property for something that looks really good and it's under $100, quick impulse conversion.
Okay.
So if we didn't cast a wider net there, we wouldn't have been able to see that occur. And then once we saw it happen, we were able to run more of it and more of it and more of it and scale it up further based on the positive return on ad spend. And as a result, it was an outstanding campaign in comparison to industry averages, but by far at that. So it's that same type of approach you want to take to these initiatives. But I touched on a few things there, particularly those existing audiences, and that's definitely how we look at it. But again, it's just a test until we see what's working best. We look to optimize everything, but eventually optimize towards what's driving and phase out the non-producers, and then look for opportunities to scale. And it's the founders, it's the marketing teams, the CEOs that scale the quickest that are really able to hit these huge levels of performance.
So, what size of business do you look for that may want capital building? Like, how big of a business do you need to be even be considered in that realm?
All shapes and sizes. So there
Really?
are solopreneurs running these campaigns. There are companies with hundreds of employees running these campaigns. It is a mix. There have been mom and pop businesses, restaurants, breweries, where they'll have 300 people come in at $1,000 each, raise 300 grand from it. I've seen, just to throw more, 3,000 people at $300 each raise $1 million off of it.
Wow, that's great.
And in the period of a month, you don't have to be the next AI, sensation. We're working with companies like that too. Working with a company that has over 54 million raised, a
That's
marketing
amazing.
AI platform, and they started, very low, a small team, small valuation, and they've kept building and building and building successfully on top of each round that hits its goals and has more publishers talking about them and more brands talking about them who now use them, and that there's a real growth marketing approach towards this beyond just the capital that you're getting. So, you have to put together a filing. You do so with the SEC. You're generally working with a FINRA regulated portal or a broker dealer. Portal is like a marketplace where all these offerings are listed, as I was touching on a bit earlier. And you should look to bring the first portion of the round from your first degree network. But as I mentioned with the restaurant example, those could just be, minimum level investments from people that customers, clients, friends, family, past employees, past employers, so on and so forth. The list doesn't end. You have hundreds of people in your network. If you're able to get a few of them to come in at minimum levels, not even, 25, 100K levels, it'll add up. And then you're able to point to that to prospects and say, hey, we have over 20, we have over 100, we have over 200 investors. Sure, maybe that's only 100K or 200K, but look how many people have validated this deal and believe in what we're doing and are shareholders alongside of us. That is a compelling showcase. It's a line around the block, and versus the empty restaurant sensation where you're saying we're an amazing company, we have $7,000 raised, or $87,000. When you add these extra amounts for over 100K, just the optics are that much better. So it's a bit of a formula. You're playing for the crowd effect. You have to really, really dump a lot of traffic onto it and consider, hey, you may only get a 1%, 2% conversion rate off the traffic. And that's actually very good. So it may take you, 100,000 visits to that offering page to get 1,000, 2,000 investments. Last year, the average investment was about $1,700 on a Reg CF campaign. So 1,000 investments would only be $1.7 million, which could be huge for a local business. You may need a few thousand investors to hit the full $5 million level on a Reg CF campaign. You may need, tens of thousands of investors to hit 50 million, 75 million, some of the amounts you could do with Regulation A plus. So you have to figure out your traffic sources, and you have to have a strong enough story and enough social proof, enough third-party validation, enough of that crowd effect, that line around the block, to be able to hit your goals. But when you do so, when you crack the code, it's somewhat systematic to scale it up. You can keep going back to the crowd and at higher and higher valuations for later and later rounds. These are very, very powerful tools.
Very nice. And obviously that's where you come in. That's where your background now. You kind of have an idea what is kind of the norm that will work. I'm excited to I might want to talk to you later on about that. That sounds really, really cool. So now let me ask you a question. So you've been a speaker on many places. In fact, you have your own podcast, right? Tell me more about that. Tell me about the speaking. Who usually asks you to speak, other than myself, of course. But what's your podcast about, and how does that help you?
Sure. I've spoken at conferences in 8 countries. I've been a guest
Woo.
for many podcasts, digital conferences, webinars. The list goes on. My podcast I launched in 2020. It's called Test Optimize Scale. I told you, it's something I say a lot. And I've put out over 230 episodes, each with different
Nice.
guests.
Very cool.
Many clients, many strategic partners, fellow panelists from different speaking events, some of the top marketers in the world, some of the top VCs, and I really feel like I learn from every episode. They're all about the guest and their journey, their story, what they tested, how they optimized, especially wasn't working right out of the gate, how they were able to scale. Those are recurring themes, questions throughout the discussion. We do video and audio. I've built a nice audience on YouTube, and always able to point to different thought leadership pieces. I try to ask the questions that I would be curious about as an audience member, and that's really what frames the conversation for me. And had hesitations getting into it, got good feedback, kept doing more of it. I have a lot of people reach out to me at this point around being a guest and around different partnerships. It's really grown into its own thing. But I do it for my own education at this point, and to be able to share insights from what we've learned from campaigns, which I bring to those conversations, as well as what my guests are pointing out.
So you seem like very versed, very well spoken. You said you had some reservations of maybe doing it. What were those? What made were you worried about something? What? Tell me.
Absolutely, you dig in at all the right places. I may add, Gene, but yes, I did. I could tell you if I was in front of an audience, feed off their energy a little bit. I could see if I was going in the right direction, if I was being too long-winded. I could get a sense of the room and, even the other panelists and the moderator. If fireside chat, I'd be able to mirror, simple things too. Tonality and cadence and pacing and everything about what you're how what you're saying and how you're saying it gets shifted when you're in an in-person discussion. You could feel it out next time you're at a conference and speaking to many people in the same day. Notice how you're different for every conversation. During a recording, they're just getting one version of you and it's captured. So I was unsure exactly what I would bring to that. exactly what people would get out of it, if they would laugh or think it was helpful or a waste of time, if they'd tune out, if it would change how they speak to me thereafter. But those are all just little mind
Okay.
obstacles and things that we create to make it tougher. After I did it more and more, I started getting a sense of the emails and the LinkedIn messages that I would get from audience members and what they would tell me in person. Sometimes I'd get on a call and someone would say, I just binged a bunch of your episodes. And I'd ask them what
I
stood out to them, what they liked about it, why they kept listening. These speakers would tell me what they enjoyed and how it was different from other podcasts or discussions at times, and in a good way. And I would take that to heart as well too. Sometimes they have little ideas, things I could add to it. But yeah, I knew it was something new. I knew it was different than much of what I'd done. Even though, conferences and other types of speaking I was doing were recorded and published online, it was different with this being the focal point versus it being a secondary aspect of it. Uh, but got good feedback, did more, and only going to keep growing from here.
Nice. Now you have some speaking engagements coming up. Can you say anything about those yet?
There's a few. I just finished one last week for Investment Crowdfunding Week, speaking at Super Crowd in August, and we speaking at the Crowdfund Professional Association Summit in October in Washington, D.C. A few other things pending, a few other things that contract stage I can't fully talk about, but definitely more on the horizon. And then podcast we're doing weekly. I do an educational series through our webinar monthly. A few other recurring things as well.
Sweet. You seem like you're very busy.
Yeah, I try to be. I try to be less in person than, let's say, pre-COVID. I was doing a lot of Web3 cryptocurrency conferences at that time, and back then, every day there was a different one. So I've been to those events in Europe and Asia, and spoke on a blockchain panel in Australia and all over. I really sought it out. Some months it would be 10 conferences and in person. I actually like this balance a lot better. I'm able to get a lot more from the events. I'm able to do a lot more with my team. So it's been a better fit for me. But it's been different types of schedules and itineraries in the past.
Very interesting. Now you brought it up, so I gotta just inquire more. Cryptocurrency, blockchain technology. Do you have anything you want to expand on that or not?
Oh, I have all types of financial advice. No, I'm just joking. I work on the marketing side. We've worked with some of the top cryptocurrency exchanges to date. Some of them were far more prevalent in the advertising space back then. And as everybody knows, of course, picture how many Super Bowl commercials and
Right.
major media placements there were for some of those companies, and then how they fell into different news cycles. Some groups I mention these days, some groups I don't. But a lot of them actually use Reg CF, Regulation A Plus, and Reg D.
Oh,
And
okay.
with statements from the SEC other groups, I think there'll be a lot more tokenized offerings in general. We work on these types of deals compliantly. We work with gold investment opportunities, gold IRAs, real estate groups, real estate funds, REITs. Anywhere we're targeting investors and bringing them down marketing funnels, we've been able to leverage our systems, our audiences, produce results, and look to scale together. So I've worked on different crowd sales in Web3 and crypto in the past. Again, markets have changed, appetites have changed, some of the founders have changed verticals, but it's definitely an area where I've seen both founder I should say issuer, founder, CEO, as well as investor success. But volatile markets really have to have a close eye on things and understand the space. There is definitely manipulation that occurs there.
Right. Absolutely. There's no doubt on that. Now, obviously, I'm assuming that we're all waiting for the Clarity Act to come through, and that could probably bring in more investors available, right? I'm assuming. Of course, we'd like this on again, off again war thing to finish up. That could also help some trends in the market. And with that said, on trends in the market, I know AI, we've talked about a lot in trends in the market, but do you see any other trends that could make you pivot or help you hit whatever goals that you have coming up?
We keep our ear to the ground. What I'm reading about in the media, I often have issuers bringing up either to utilize as part of their campaigns, or prospective issuers, prospective companies as inquiries. What I'm seeing as emerging technology, emerging companies, emerging types of industries, we get contacted regularly around, and to raise capital, to market towards growth. So we follow the markets. Getting ahead of it, I would have been wrong in many cases in the
Mhm.
past. We do a bit of that as well too. I definitely anticipate more altcoins picking up over time. But as BTC, as some of these other currencies do, current events definitely affect investor behavior. That being said, it's much different to go after a prospective retail investor for an investment that has a $500 minimum, a $100 minimum, $1,000 minimum than it is to go after an accredited investor for a $1 million minimum type of deal, or 100K, what have you. So there's always a way to raise capital, whether you have to rely on large audiences with small transactional value each, or fewer investors but at larger amounts. Definitely has more of a reflection on the current state of things. But we're all in the same. We're all in the same world. We're all, I'd say we're all in the same ship. We're all in the same boat, but we're all in different boats. Rising
Right.
tides lift all ships. We're all going through the same atmospheric river, the same ocean.
So what is next for Jason, or do you see it as just going in the same direction that you're going? Do you see any major shifts, or is it just status quo for you?
Well, at some point, there'll be much greater mainstream adoption of these, crowd sales,
Mm.
investment crowdfunding, high volumes of people funding projects and very quickly. I feel like I'm still explaining to people what investment crowdfunding is every day. Reg CF went into effect in May 2016. The 10-year anniversary is here, and I still believe there's a large educational process for many companies. As there are more investor success stories, as there's more unicorns that raised, round after round using these exemptions, and produced, significant shareholder value, and through liquidity events, that type of upside became something talked about and very regularly. I think there's going to be, an overflow of companies, that this will even be the primary approach towards capital formation. So continuing to improve our systems, finding more ways to reach the right audiences and to convert them at higher levels and to see a higher success rate industry wide. I would tell you the success rate's already higher using these types of tactics versus going after VCs, angel investors. Percentage wise, still a great path for many companies, but percentage wise, as that occurs, we're going to be busier and busier. I'm looking for larger and larger, content opportunities. Part of advocacy groups, we're pushing for the limits on what you can raise using these vehicles to increase and increase and increase, pushing for tax incentives for investors, pushing for all different types of things that can have, the tax professionals you're working with and the lawyers and everyone who's involved in launching a company pointing you towards the crowd, pointing you towards marketing tools where you can go well beyond your first degree and secondary networks for investors. So I'm going to be at the forefront of that.
Very nice. I feel there's so many moving parts with that involvement of connecting the investors and the marketing for to build growth for these businesses. And I think it's amazing. I think you're a unique individual to have both sides of the financial side as well as the marketing side. I think that is awesome. I really enjoyed you on this podcast. So I'm going to kind of end it with this question. If there's one thing that you want the listeners to know, whether your listeners, our listeners, it doesn't matter, of you your business, it's if they take one main thing away that you don't want them to forget, what would that be?
I like this statement of do more. I talked about how fierce competition is. I talked about success rates a little bit. I talked about traffic and conversion patterns. And I would tell you, whatever your marketing stack is right now, whatever you're doing to raise capital, do more. There's absolutely more you could be executing towards your goals. And other people that you may be speaking to or behind closed doors at the moment are playing for those same achievements. So if you are not taking those steps, someone else will. If you are expecting investors to just fall at your doorstep, they're going to be driven somewhere else by one of our marketing campaigns, let alone any of the other ones that I watch in the verticals. You should be throwing everything at it. And as you're seeing performance scale and scale aggressively. Again, that's the commonality I see from all of these market leaders. So I'll speak to founders at conferences, or a lot of people reach out to me on a daily basis, and they're always trying to time the market or wait for this other thing, or maybe at some point, or we're good right now, or we're doing enough right now. Say it 10 other ways, but do more.
I think that is also some great advice to give the up and coming industry leaders good advice as they're getting to do more and getting more involved. I think that's awesome. Do you have any other questions for me before we end?
This has been an awesome discussion. I'd love to ask, like, hey, 1 to 10, how great was I compared to the other guests? But I won't put you on the spot. I've enjoyed the conversation. Happy to speak to anyone who has more marketing questions. Look forward to continuing our discussion. And just thank you so much for having me on. It's been an honor.
Oh, no, I think the pleasure's all mine. When I heard you were coming on, I was excited. And so now it's like, hey, it's a shame that each one has to come to an end, but I think it's the end of a beginning. And I think it's pretty awesome. And everybody go check out Jason Fishman at DNA. And again, can you say the name of your podcast one more time?
Yeah, test, optimize, scale. The
Perfect.
pauses are periods. You could find us on any audio channel. Could find us on YouTube. In fact, youtube.com/at digital niche agency. You'll see playlists for my podcast, our educational series, all types of stuff on there. And you can get links to it from our website as well too, digitalnicheagency.com. And don't be afraid to reach out on LinkedIn.
Awesome. I'm going to be one of your next subscribers. With that, I want to say, hey, if you like our content, please like, subscribe, forward, share, whatever you want to do. I'm excited about it. It's been a pleasure. Jason, thank you so much. And I'm sure we'll see you again. Okay.
Thank you, Gene. Really enjoyed it. Thanks everybody for tuning in as well.
Awesome. Thank you so much.